What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 24th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got so much news to cover here today, guys. We've got two groundbreaking stories here that are solidifying Bitcoin as not only an alternative hedging asset comparative to gold, but also potentially a replacement for traditional payments and currencies. We'll be diving into what that means for the market and also diving into the technicals and data science that are showcasing the supply and demand dynamics of where Bitcoin's at right now and what our next short-term price target will be for Bitcoin. And last but not least as well, for all you DeFi heads out there, Uniswap has finally announced a Uniswap v3, which we're going to be diving into and talking about what it means for the Uniswap protocol going forward, and also whether or not I'm generally bullish or bearish off of the news. So we've got a lot of things to discuss right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2020 tax season is here. Calculating taxes on cryptocurrency is complex and time-consuming, but TaxBit has made it easy by automating the entire process. Link your exchanges and wallets to seamlessly pull your transactions through their tax engine and auto-generate your tax forms. Aside from automating taxes, TaxBit provides crypto enthusiasts real-time portfolio tracking and tax optimization visibility so that you can make tax optimization crypto trades throughout the year. If you're looking to stay IRS compliant, have real-time portfolio visibility, and save money on cryptocurrency taxes, then TaxBit is the platform for you. Check out the link down below in the description for more information. Alrighty, everyone, so let's go ahead and dive straight into taking a look across the board of the market here. Over the last 24 hours here, not only are the market leaders in the green, but the vast majority of cryptocurrencies are in green territory, slightly edging into a no trend scenario between 1% to 2% to the upside or downside. Now, I want to dive straight into the news here, guys. As you can see, and as many of you have probably heard by now on Twitter, as it was posted earlier this morning, you can now buy Tesla vehicles with Bitcoin. It's official through the website now. When you order your Tesla, you can actually go about paying with Bitcoin. Now, I think the option right now might be slightly down at the moment. I'd seen some people sharing some screenshots of it, but as of now, in this case, Tesla is making a conceded effort. It's confirmed through Elon, through their official website, as they mentioned in their SEC filing, that you can now pay for your Tesla in Bitcoin. Now, first off, this is just really awesome because it gives a whole new wave of people an option to buy their vehicle and their currency of choice, and brings awareness to Bitcoin for all people who are engaging in purchasing in Teslas. But there's a really important caveat here that actually makes it an even bigger deal. And that is that Tesla is going a step further than the MicroStrategies of the world and a lot of other companies who have treated Bitcoin as a treasury asset, something to convert their cash into, almost like an investment. What Tesla is committed to using is not only open source software and operating Bitcoin nodes directly, which is nice to see, but really the fact that they're able to be paid for Teslas in Bitcoin and they're going to retain it in Bitcoin. So they're not going to do what most crypto debit card solutions do, where they take your crypto, liquidate it, and cover for your expenses on the traditional Visa or MasterCard payment rails. No, this is a direct reveal of Bitcoin as a payment option, receiving it as an option, and keeping it as a treasury reserve asset, just like you would receiving cash or deliverables in this case for providing a service or a product and keeping it in your bank, right? So they're basically keeping Bitcoin as a treasury reserve asset, but they're also receiving it as a form of payment. And this really leapfrogs Bitcoin's adoption here. Again, further showcases that Tesla's really making a commitment here to Bitcoin. And I think showcases here that we've gone from kind of the niche small communities of small businesses taking Bitcoin as an alternative payment option to the innovative companies that are going to lead the frontier here to normalize it for the mainstream companies as they follow suit here over the next year to 3 years. So I think this is really fantastic stuff, guys. Again, I can't emphasize how big this is in regards to news here for the further adoption, because the more and more Tesla doubles down on this, you're going to have more companies betting in, right? So again, I have no doubt that, again, at the end of the day, the market might be overpricing this, but there's also some other good fundamental developments here. And that's the comments from Fed Chairman Jay Powell. Do you guys remember 2, 3, 4 years back, maybe even 5 years back in this case, whenever central bankers would talk about Bitcoin or cryptocurrencies, they'd have nothing but negative things to say, right? Same with commercial bankers like Jamie Dimon. Everyone was shouting through the roof that Bitcoin was a bubble, that it was compared to tulips, and that there was going to be no lasting effort for it. Well, in this case, Jay Powell has just come out through a BIS meeting, or Bank of International Settlements meeting that was hosted recently, and he claimed that crypto more specifically Bitcoin in this case, is a substitute for gold, not the US dollar. Now, if you listen to the latter of this statement here, that it's not a replacement for the dollar, it would seem quite negative. But let's just take a step back here, right? We understand central bankers are probably never going to admit that Bitcoin would ever be a replacement for payments, for savings, etc., comparative to the native currency they have sole proprietary ownership over and the ability to print and manage interest rates over. But what Jay Powell just admitted here is something that people have been trying to shift as a narrative for years, and that is crypto being a substitute for reserve assets like gold. A multi-trillion-dollar asset, a $12 trillion asset class. Could Bitcoin be a replacement? Jay Powell seems to think so, and he's openly making these comments now. So here's the catch here. Central bankers are starting to cave into the realization that this asset class is not going away anytime soon. And they're continuously talking about how this is, they're saying that Bitcoin is not pushing for the development of a digital dollar in this case. And whether it is or isn't, that's really kind of a weird kind of pivot to go to or to argue, because whether Bitcoin's doing it or not, central bankers are pushing for central bank digital currencies because it gives them more retained control. They're trying to hold on to what little control they have here with traditional fiat currencies. Because when a central bank has the sole ability not only to issue currency, but also to issue it directly through a central bank digital account, they now are starting to step into the commercial banking sector. They are now potentially serving as a replacement for commercial banks. That's the key reason central bankers want central bank digital currencies. There's really no added, per se, privacy or decentralization. It's all centrally controlled, and new currencies are issued through the central banks just like they commonly are. But again, what we're going to see here is that long term, if central banks can't mitigate inflation, just like they couldn't in 2020 when they massively flooded the system with cash, Bitcoin is going to be the opportune choice for people to look at it as a reserve treasury asset. Not here this year, but over the next 3 to 5 years, next 10 years, etc., as it continues to gain more popularity. Now, let's go ahead here, and as we understand these kind of developments going on in this space, let's talk a little bit about the risk to reward ratio for Bitcoin here at this point. And not only just look specifically at the risk and reward ratio, but also take a look at a variety of data science models. So really, really interesting piece here by CoinDesk, focusing here on the reserve risk for Bitcoin. Now we'll have to unfortunately do it here in the article because Glassnode has a paywall here. But what's really nice here within the article is we can see that the reserve risk ratio is far from what we saw back here at the peak of 2017. The two secondary peaks here in the 2013 and 2014 rallies, and then also back here in 2011 when we set in our first initial peak for Bitcoin. So again, to the point here that we've talked about for some time, I think we're far away from setting in the top for the cycle. We've still stayed committed towards probably a $100,000 to $200,000 target. I'm favoring much more towards the latter of 200,000. I think that we've got a ways to go here in the sense of reaching our high. But in that statement, it really means here that we're going to have some time delay from what people are expecting until we reach that 200K figure, until we reach that multi-trillion-dollar valuation, right? If we're at $50,000 right now, or a little bit above there, around 58,000, right? At this valuation, we're charting a little bit above $1 trillion valuation. If we're shooting for that 200K valuation, we're roughly getting close towards around $4 trillion. And I think that that's doable in this cycle, but it's going to take time to get there because we cannot doubt that there are going to be some companies, some hodlers in this case, some traders and whales who are going to sell some of their positions, right? Who are going to cash in this case, or going to take profits back to other currencies, right? It's very, very understandable. So what I think here is going to happen is that as we've been kind of pushing sideways here, we might get some sideways delay here in the market, especially as we're reaching up towards some really critical price points, like the logarithmic line of resistance for Bitcoin, right? As we've talked about here on the chart, we know we're getting very, very close here to that 70K level. And I think that it's going to set us up for a position where we can push sideways and really play into the expanding cycle theory. This is where, again, I've started to have a bit of reignited confidence that expanding cycles are going to be the play here. Now, let's go ahead here and take a look at some of the other data science models just to kind of play into this thesis here. A lot of people would be nervous, for example, looking at the Bitcoin Investor tool, the 2-year MA multiplier, which takes the 2-year moving average and multiplies it in this manner, and by a certain value factor. It's about 5x here from what the normal 2-year moving average is, and it actually gives us a really good window here towards the periods where Bitcoin is starting to get overbought. Well, what we find here is that the first time we retested this line here, like we did here in February of 2021, we actually still had multiple months going all the way from June to December here. So pretty much half a year before we actually set in the new highs for the cycle, right? And overall, it seems like with all these cycles that we tend to test this range more and more here as we go towards the future cycles here, right? So the general point I want to make here is that I think that as we test this range here, we probably will have a period where we pull away from it, where we start to have some more kind of general sideways or slight corrective price action, and then we start to chart up higher later in 2021 or in 2022. And again, our target that we talked about back in the day was November 2022, testing a price range of $200,000. That would be phenomenal for Bitcoin. After already having an expansive rally, considering the fact that altcoins are going to probably do much better throughout these periods of speculation, rides up higher, at the end of the day, this means that Bitcoin is going to far outpace equities or any other market here over the next couple of years, even if it goes into November 2022. So again, nothing bearish about that outlook. Now, I know some people have been really nervous if you've been looking at the data science models about, for example, wallet sizes. The amount of wallets here that are holding over 1,000 Bitcoin, dropping from 24, nearly 2,500, down here towards around 2,270. Now, a lot of people are, cautious about this, but I would say overall that this more than anything signals that we're probably going to get a sideways period, as we've been discussing, this kind of sideways correction, versus the start of a bear market. And the reason why is because the actual peak of the market happened when hodlers flattened out here after a correction, right? So we really started to get the bear market as we flatlined here on wallets over 1,000 Bitcoin. It's not like they depleted when the bear market came. They actually started depleting back here in 2016. So this again might be a sign of whales reducing their positions and corporate treasurers swallowing up these positions, right? Massive OTC deals where whales might want to take some chips off the table, some of their winnings from the poker table. They want to give it out to corporate treasurers who feel that this is a good time to get into Bitcoin. Could very well be the case. Could be other buyers as well. But again, my point here stands that overall, the data science models here aren't looking scary for Bitcoin, but they aren't screaming optimism like a lot of people are saying, in my opinion, from what I can analyze here. And I'm saying that as someone who's heavily invested in crypto, I really think here that around 70K at this historic level, we're going to face some resistance as we've been setting in these lower differentials on the highs and also these lower levels of corrections. Things are tightening in here. The optimism isn't as big, but also the sell side pressure isn't as big. We're waiting to see what's going to happen when we get towards that 70K figure. I think that's what a lot of capital is waiting for at the moment before they build any big positions. Because if they're looking to get in at a discount, they're going to wait to see what happens at around 70K. They're not going to be buying these kind of dips here for massive positions, right? The players that are going to be driving Bitcoin's price to that 200K level, they're looking to build positions at the right time. Now, what I want to do here is, I know my webcam's probably in the way, so what I'll do is I'll zoom out here, and should be good now where you guys can see it. But I wanted to showcase exchange reserves still holding on the lower band here, not budging above that 2.4 million figure here, going all the way down from nearly 3 million down to 2.4. So hundreds of thousands of Bitcoin being extracted from exchange order books. Miners now as well, going from an initial major sell side position here and still favoring the sell side, are now, just like back here in February, starting to favor back towards more optimistic positions. They're building net position changes here to the upside. So positive net positions where they're actually adding more Bitcoin rather than just selling. And outside of that as well, Ethereum reserves. If you want to take a look at the broader crypto space, take a look here at Ethereum reserves. Continuing to climb down from around the near 26 million ETH reserves on exchanges down towards around 20 million. This is a massive supply and demand change dynamic here that we have to keep in mind here, guys, going forward over the next few months when it comes to price. And altcoin dominance, still holding on the upper band here from where it set back here in early February. Same exact level here in November. Question here is whether or not we can get that clear close on the daily above 40% market dominance. When that happens, the altcoin cycle's here and it's likely going into May. So I'm very, very pumped up about this, guys. Now, let's go ahead. I've done enough rambling on the market and Bitcoin news. Let's talk about Uniswap v3. Now, I want to tell you guys one thing here. As someone who has integrated Uniswap, as someone who is massively exposed to Uni as a token, I'll be completely blunt in saying that. I don't mind telling you guys where I'm invested. I have to say I've been looking forward to this for a very, very, very long time. And I want to go ahead and give you guys the general verdict here. This has been 18 months in the working for Uniswap v3. It's been something that's been hinted and talked about for over a year now. And the question here remains whether or not I'm optimistic or bearish on it. And I'm going to say one thing here. I'm relatively neutral. Now, that's not just me trying to kind of cater both sides here. I want to spend some time to talk about this, the good and the bad here. I have to first say to Uniswap and any other team who works multitudes of months, up to more than a year, to develop these types of things, hats off to you guys. It's really awesome to see this out. And again, it further solidifies here why I've been very, very bullish and optimistic, and we've integrated Uniswap into the Digifox application. There's a ton of other wallets and providers out there who have done the same because Uniswap's a great protocol. It's still, to this date, the most useful and clear-cut example of a killer use case in the cryptocurrency space. But in regards to the good and the bad here, there are some things we need to discuss. So the good news here, the good news is that Uniswap v3 solidifies Uniswap's position overall as an emerging protocol in the Ethereum ecosystem. I think it is hands down, in this case, put itself at a hierarchical position, in this case, against any other potential forks or copycats. SushiSwap, potential other plays like Bancor, Kyber Network. It has solidified itself in the Ethereum ecosystem with this update. And it comes through a few different advances in technologies as well as some business changes that are very, very important to understand. So we'll talk about a little bit about the concentrated liquidity discussion. This is really the major innovation here that Uniswap brings in. The ability of liquidity providers or people who are providing equal pairs of one token and another token, usually like ETH to another altcoin or USDC to another altcoin, and the ability to provide liquidity pairs that are only active during certain price ranges, which help to not only mitigate impermanent loss, which is very, very big for liquidity providers, but outside of this as well, provides the ability to only actually generate fees during these periods of time and actually use your liquidity during these periods of time, which means you can actually use much less liquidity in order to provide much lower degrees of slippage. In this case, what they're basically doing is optimizing the liquidity provision. They are allowing for liquidity provision optimization to dramatically reduce the amount of liquidity that you need to actually provide. Now, this might sound a bit confusing, but I highly recommend you guys read through the article. And what this means is that DEXs like Uniswap, who are utilizing this technology, can now have centralized exchange order book liquidity for practically any token through this optimization, where it is going to make slippage much, much lower. And that's a huge benefit here. As DEXs move to layer 2, this dramatic reduction of slippage is going to play very, very big into actually making it competitive with the Binances and the Coinbases of the world, right? Now, for some currency pairs, this has already been the case, but being able to broaden this towards a larger range of currencies is, again, going to make, as it's more optimal for liquidity to come here, it's going to make Uniswap a liquidity vortex here if they continue to deliver on this promise here when they launch Uniswap v3, right? So this is very, very big here. Now, the launch is set for April, but there's also some other big changes we need to talk about, right? This capital efficiency is very, very big overall with this optimization of liquidity provision. So like I'll show just for an example here, they actually have really good diagrams. So if you deposit, say, 150,000 here and you select it where you only are expecting to use this liquidity, right, $150,000 for a certain price range, you actually generate much more fees per dollar liquidity you're putting in, and it allows you to actually have a much, much wider range of capital available during that price range where slippage is much, much lower. So instead of incurring 1% to 2% slippage, you could be incurring 0.1 or 0.2% or maybe even lower than that for the same amount of traded volume. Now, there's a few other things here that you could talk about, like range orders, a few of these things, but I want to dive into really the business benefits here for Uniswap and Uni token holders, the beneficial news here that's really underwritten here. The ability for flexible fees. This is going to make Uniswap very competitive if some of the players here can start to charge lower fees. I know Bancor has explored with this, but basically giving the opportunity for certain pairs to offer lower trading fees to compete with protocols like Curve on stablecoin pairs. And outside of that as well, possibly even getting to this lower ballpark range of 0.05% for maybe some even altcoin pairs. It really depends on the volatility, but again, this is going to be another competitive advantage. They also mentioned another thing here. Uniswap v2, and this is the big thing that a lot of people have missed. The Uniswap v2 protocol introduced a protocol fee switch. This is something where the governance was able to basically, in effect, allow for uni holders to vote on implementing, in this case, a feature where the governance system could charge a fee on all trades or take some of the fees convected by liquidity providers and give it to uni token holders as a form of, per se, revenue generation for fees. Well, they've now bumped that up between 10 to 25% of LP fees. And again, if we're talking about this widened range here, right, there's some really wide potential ranges where, similar to the SushiSwap token, uni token holders could really start to see the benefit of the growth of the protocol. And this is where, again, as I've talked about, the benefit comes in for uni token holders, whether it's being able to be used as a fee token similar to Binance or as a kind of a stakeholding in this case to get revenue. Now that's really big here. But the other big thing that was underwritten here is the modification for the Uniswap v3 core, which is its licensing, switching towards a business source license 1.1. Now, to be honest with you guys, what this means is that the code itself for Uniswap v3 is still open source. For integrated partners like Digifox, we can still integrate into Uniswap and utilize it within our app and charge secondary fees on top. Right? There's all kinds of different things here that you can still do with Uniswap. The thing is, though, is this prevents another SushiSwap, another fork of the Uniswap protocol, like so many providers have tried to do. And this protects Uniswap's v3 technological advancements here in regards to the ability to optimize liquidity to a pretty decent degree. The question here is whether or not this will be enforceable. But at the end of the day, in traditional technological speak here when it comes to legalese on protecting this technology, this should effectively prevent other providers out there from using the source code of Uniswap v3. They'll either have to build another means to providing the same functionality through Solidity or another language on its separate blockchain, or they're going to have to live in the reality that they can't utilize Uniswap's tech. And this does give it some protective competitive advantage. It doesn't prevent someone else from per se building up the same tech, but this would solidify Uniswap as that vortex in the Ethereum ecosystem if layer 2 comes up. And this is where I want to speak a little bit to where I'm a bit disappointed here. I'm a bit disappointed that Uniswap v3 did not come with a simultaneous launch of L2, or basically Optimism. When we saw the articles coming out in March that Optimism was going to be deploying in March, and that they'd raised the recent round, and that Uniswap had been working closely with Optimism all the way back September of 2019 through the Unipig demo, it really disappoints me, because I have to say that for Uniswap as a protocol, as someone who's heavily invested in it, and outside of that as well, for the broader Ethereum ecosystem, we are really relying that layer 2 gets out there as soon as possible. It's the only downside I see with this announcement. And I think it's why, when we take a look at Uni as a token, why it's performed quite negatively since the announcement. The announcement really came out here, the price shot up initially, and then started to climb downward, down here to where it was back on March 20th. It's really not the end of the world. It's 4 days worth of gains against Bitcoin down. But I digress on this. I want to be candid and not biased and being transparent with you guys that I really think L2 should have been a priority much, much further ahead. But I think I see where Uniswap and the Uniswap Labs more specifically is going with this. Because with this more protective environment and this unique selling proposition as a platform for LPs and as serving as an automated market maker, with this unique selling proposition to drag in liquidity in a more optimized fashion, this will allow for greater reduction of slippage. And we know that with layer 2, it's almost guaranteed here that gas fees are going to be declining. They're going to be a fraction of what they used to cost. Now it's a matter of making sure that there's enough liquidity, in this case on the platform, similar to order books on an exchange, in order to reduce slippage and allow people to seamlessly swap from one asset to another. I think, if I get it right, Uniswap Labs feels that this is the number one priority first, and that everyone's going to have the opportunity with Optimism to go to layer 2. It's going to be a matter of what platform has the lowest slippage at the end of the day. So I do see the strategic benefit here, and also the added changes here that make people more optimistic to be Uni token holders. So again, I would say that I'm relatively neutral about it, because the biggest concern I have at the end of the day with all that positive news and technological advancements is that if it's going to be May or late April before we get this push, every month in crypto is a year in crypto. We've really got to see if Ethereum will be able to provide DeFi for everyone here in the interim. I got to say, if it's not going to be in the summer, I feel a lot more confident. But again, knowing that technology usually ends up getting pushed back in the deployment, right? Again, I feel a bit nerve-wracking in this case about that. That's the only thing. Now, if you guys are wondering if I've changed my positions, I haven't changed a thing. I haven't bought any Uni, haven't sold any Uni since my positions, right? So again, this hasn't made me change, or really since the announcement in this case. That's the point I'm trying to make. So sorry guys, I know I've been rambling on for a little bit. Anyways, with all this talk, guys, I do want to mention one thing. Again, as we're talking about Uni, for example, being one of the positions that I've made for this year, and I've been able to materialize a lot of capital gains on, it's really important here to focus on how you're going to prepare for tax season. And there's a link down below in the description for those of you who are interested in TaxBit, where you can sign up for any of their 3 plans and get 10% off if you use the referral link down below. Again, guys, I highly recommend you guys give it a chance. TaxBit is a great platform. We just actually recorded an interview with Austin we're going to have here on the channel on Friday that I highly recommend you guys check out. And it'll answer a lot of questions in relation to taxes, etc. But that being said, everyone, thank you all so much for watching this video. If you liked it, please consider dropping a like down below. And if you haven't already, consider subscribing and hitting the bell icon. If you listen this long and listen to me ramble, it means you're part of the family here. So why not make that commitment today by subscribing to the channel? All right, guys, that's it for today's video. Thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.